Hello, my name is Shayna Mace, and I'm editorial director with BRAVA magazine. Thank you for joining us along with Summit Credit Union and Summit Financial Advisors for today's virtual panel discussion on how to advocate for yourself and enjoy more financial security, whether you're a part of the workforce or a stay-at-home parent. Summit Credit Union is passionate about helping all members build wealth and financial security, but specifically women. Women generally have less saved in retirement than men and are at greater risk for poverty in what should be our golden years. We'll talk about the factors that contribute to that in today's discussion. We'll also share tips and resources you can use to make a positive impact on your financial and life decisions, as well as your overall well-being, both now and in the future. I have some wonderful panelists with me here today. Our panelists today include Jody Brown, Vice President of Wealth Management, Summit Financial Advisors, located at Summit Credit Union. Jody has been a Summit employee for over 14 years and boasts over 25 years in the industry. She helps members achieve goals through services including retirement planning, financial management, insurance, and wealth management. She is a certified financial planner professional and has earned the Chartered Financial Consultant and Certified Life Underwriter designations. Welcome, Jody.
Thanks for having me.
We also have Becky Gerathanos with us, Chief Operations Officer at Summit Credit Union. Becky is a passionate strategic leader for Summit Credit Union's focus on empowering members, and women specifically, to gain financial knowledge and security so that they can enjoy life and retirement to the fullest. A 27-year veteran with Summit, Becky inspires her teams to carry out Summit's commitment to financial wellness in all areas she oversees, which include the retail branch network, card programs and payments, facilities, risk management, collections, marketing, and communications. Welcome, Becky.
Thank you so much.
And we have with us Tara Clune, who is VP Human Resources at Summit Credit Union. Tara has 21 years of progressive HR experience, a passion for supporting employee development and building organizational strength through business leader partnerships. Tara is well-versed in compensation and total rewards, benefit design, talent acquisition strategy, employee relations, diversity, equity, and inclusion, data analytics, and employee engagement. And her work for employee engagement initiatives has helped Summit win multiple Best Workplace designations in Madison and regionally. Welcome, Tara.
Thank you.
So we will start our panel discussion now with some great questions about women and money. So Becky, why is it that women have less saved in retirement? Can you speak to the challenges women face when it comes to their short and long-term financial security?
Sure. So, there are several factors that contribute to this. Women have very unique challenges when you think about their short and long-term financial needs. On average, women earn less over their lifetimes. They save less over their lifetimes. They live longer. They often have higher expenses. Regular day-to-day necessities often cost women more. They're more likely to be single-parent heads of households. 80% of single-parent households are led by women, so they're more likely to have responsibility for an entire household's expenses and money management. And all of that means that women need to be even better at managing their money than men. And so women are 43% more likely to retire in poverty. And that is a statistic that we are committed to changing at Summit Credit Union. So 50% of women have $0 saved for retirement when that time comes. And if they do have money saved, it's oftentimes at a little bit smaller of a balance than a man's might be, generally. There are a lot of factors that contribute to women earning less over their lifetimes. There's a lack of representation of women in higher paying fields, such as STEM. There is a lack of representation for women in higher paying positions, certainly Summit being an exception to that. But when you look at Fortune 500 companies, only 10% of CEOs are women, and that's the highest it's ever been, right? But women are 50% of the population. And women are more likely to leave the workforce over the course of their careers for caregiving for family members. And when they come back to the workforce, it can be more difficult for them to come back at a similar level. And so all of that impacts women's ongoing. They're less likely to negotiate salaries, which Tara is going to talk about. And that impacts lifetime earnings. That follows women throughout their lifetimes too. It impacts bonuses and raises, and it might impact subsequent jobs and employer retirement matches and things like that. So some estimates put the lifetime earnings disparity over 40 years at about $500,000 on an average, and that can translate into more than $1.6 million less in retirement savings. And so, and that's even more impactful for women of color. So there's a lot of challenges and unique things that women face in building their long-term financial security, and we really want to help women with all of those.
And part of that is talking about these issues today and bringing them to the forefront. They feel like significant challenges. So where do women start in addressing these challenges?
Yeah, well, I think the most important word that you use there, and I think Jody would agree with this, is start. No matter where you are on your journey, it's important to start with something, right? Taking action and taking a step, even if it's small, reduces stress. It gives you a feeling of control, and it creates positive momentum. So whether you are at a spot where you want to build emergency savings, right? That's where you're at. Well, it's important to be mindful, actually, no matter what your goal is, of how you're spending your money. And so using tools that help you understand that. How are you spending? How are you saving? Are those things in alignment with your goals? We have a lot of resources that you can use to be able to do that, but we will also, on your own if you want, we will also talk to you about that and help you come up with that plan. But once you set attainable goals, you start small, you build on it from there. One of our Project Money participants said about a savings account that even just a simple act of having a savings account and putting money in it automatically made her feel so positive about her future, and she used the words, it lifted a black cloud from what she felt was just an overwhelming aspect of her life. And so taking action, taking a step, being mindful of how you're spending and how you're saving is so important, and that's relevant whether you are building an emergency savings, saving for a down payment on a home, want to grow a business, or whether you're thinking about your longer term planning. Taking action and steps is the most important thing you can do. I should also say, make sure that if your employer is contributing to your retirement plan, that you take full advantage of that. And if you can't right away, that's okay. Start somewhere, take steps to get there over time. So don't avoid it, start with something, take some steps, and we can help you do that.
One little hack I love that I remember reading about is when you're saving towards something, you can even rename the account something like vacation account or something like that. It almost makes it more tangible. So when you mentioned that, it made me automatically think of that your Project Money client was like, it lifted that black cloud, just giving some hope, right?
Absolutely. We recommend that quite often. If you think about it in your online banking or your mobile app, you can set it up so that it's almost like a virtual envelope, right? So I remember my grandmother had a lot of money in envelopes in her house, but they were all designated for different things, right? And so now we can do that in a different way, and we can also make it really easy. So just put the money there. Even if it's a small amount, it doesn't matter if it's $10 or $1,000. If you're taking the step, you feel good about taking that action.
Just start, right?
Just start, right.
That's what you're saying.
Yes.
Well, one of the financial challenges you mentioned is that women are more likely to leave the workforce for caregiving. But isn't eliminating that daycare cost by being a stay-at-home parent, for example, a financial gain, Jody?
That's a great question, Gina, and I think it's a case where each household has to understand their budget. Taking control, as Becky said, is really where it all starts. Where are your dollars being spent? And if you look at those dollars and you say, daycare is going to be about what I would make, before you just assume it's a wash, you have to look at behind the scenes, the things that your job might be providing you. Is it providing you regular opportunities for raises, promotions, bonuses that perhaps you've used for things around the house or for your house, your children in the future. So I think the key is to better understand your budget and then what are some of those trade-offs. Some of the bigger picture things I see that we don't realize is, just as easy as it might be today for us to say, I'm just gonna have a cupcake for lunch, right? That's one expense then versus buying a salad and a cup of soup or a sandwich. But the thing is the long-term impacts, right? My energy level will probably die, in the future with that cupcake, or my nutritional strength won't be there in the future. And I think that's the same with our finances. Social Security is built on the highest 35 years. So even if they're not all like you consider high years, it's better than a zero. So if you have zero, that can be very daunting as you start to eventually rely on that for your retirement savings. Another thing that can run into it is that although the cost of daycare can seem like it's just, again, a wash, you look at what does that do for your retirement savings beyond just Social Security? Are you able to still start saving on your own or continue saving? Are you walking away from a match, as Becky had just mentioned? So when I look at that discussion, which comes up very often as people start to look at their planning of a family, it's not just a given that one of the two has to give up their earnings potential. It's just perhaps a choice and a communication plan that has to be thought through and figured out. But I think, again, without just walking away and assuming the dollars are an easy absorbing, there's a plan that can be put together for that.
That's great to be more thoughtful, and I like how you said look behind the scenes. I think that's really important for people to understand. It's not just this, there's a lot more that goes into it. I wanted to remind you, by the way, that you are free to submit questions in the chat box that we will answer at the end. So please do that throughout the discussion, and we will take a look at those and ask our lovely panelists those questions at the end. But building off of that, how do women take action to build wealth for their own retirement if they're a stay-at-home parent and don't have a defined income? What steps do you suggest to figure out to save for that parent, the stay-at-home parent's retirement?
I know it might seem like we're planning this when we keep repeating things, but really that budget or that understanding of how your numbers are spent is where I start every single appointment I have, whether they're coming in to save for their children's college, for daycare, for a future home. You have to know how much you make and how much you're spending, and if how much you make is being cut because one of the two income earners in the household decided to stay at home with that, well, then how do we adjust? If the burden falls only on the individual that's not working to make those adjustments, that can be a very heavy weight, just as if it also would fall on the one working. If we say the one bringing in the income has to be the one to decide that. So to me, I think you can save for retirement in many manners if you're not bringing in a paycheck. If you have a household income that is being reported, you can still contribute to a Roth or a traditional IRA. If you feel like that's not allowing you enough freedom for those dollars, the key is just what manner would allow you that fit of both saving in a manner, whether it be, again, as Becky alluded to, $5 a month, $10 a month, and then building on that, but something so that you can look over and reflect and realize you haven't taken that step back. You can utilize the earning individual's employer plan as well, but I oftentimes try to shy away from that because, again, the individual that has chosen to stay at home might feel neglected in many manners if they don't have the money being put aside in their name as well, despite the relationship and the strength in the future that, what's theirs is mine. It's sometimes just, rewarding to have that set aside for yourself. So I look for those options, whether they be specific retirement accounts or non-retirement accounts, but setting aside that disciplined amount every month, and small is where we start. We don't start with millions, we start with $5 and we build on that. And that way you can see it, less impactful to the overall situation.
And it makes it feel less, as we've talked about, like such a big insurmountable challenge. Just starting small is the way to go. So I love that you guys keep repeating that, because that's really encouraging for women to just, even watching this today, could say, okay, I can start, I can do this.
Yeah, I think too often the biggest mistake is thinking it has to be more substantial. And, I'm going to put in $200. Well, then how much of that's going to come right back out, though? It's, again, like eating well Monday through Friday and then eating terrible on the weekend, right? You undid all the good. So start with what you can look away from and really sustain. Mm-hmm.
What do you see as the key to a couple's success in saving for that stay-at-home parent's retirement? I mean, you referred to a couple of things in your prior answer, but what else?
No, and I'll just restate that because I really believe that that's something that in anything in life, you want to have that open communication. And I respect that there's always division of duties. Most households, when they come in, if it's been a two-income household, or even if it's just two individuals raising multiple, children, they have division of duties. So-and-so might do bath time, and so-and-so might do, the brushing of the teeth, whatever it might might be. Well, with the finances, I'm okay with that. I guess I want both involved, though. I want an open line of communication so that that weight isn't carried heavily on the one or the other. When I meet with individual and their other significant other isn't in the room, it's very difficult, because then they're putting that responsibility on themselves to go back and relay that message and implement that message. So the key for me is going to be just to really encourage that communication. Perhaps it's once a month, after the kids are in bed, they sit down and they look at the finances. What have we spent? What are our goals? Where are we at with those? What do we need to adjust? Life is filled with reasons that we have to adjust all the time. So how do we do that? And again, I don't mean to rain on anyone's date night, but I do think that there's times and reasons that we need to have those discussions to keep both parties informed.
Yeah, and I think what you said is so important. We've written about this before in BRAVA, as being an active participant in those discussions and not just relying on one person in the partnership, whoever that may be, to make all those decisions. I mean, then there's no surprises, right? You're always actively involved, and quite frankly, it gives you that peace of mind to know that, okay, I know what's going on, I feel comfortable with this.
Right, yep.
So what about women who are either headed to or currently in the workforce? We talked a lot about stay-at-home parents, but how can they address the challenge of earning less in their lifetimes in order to build more wealth and financial security? Tara.
Yeah, great question. Thank you. So whether you are a stay-at-home parent that's returning to the workforce, maybe you are just starting your career, or you're looking to move with your current career, one way that you can look at building wealth is positioning yourself for greater income. So, then the question, how do you do that? Well, one way to do that is through pay negotiation and understanding your worth as an employee. And when it comes to pay, there is a lot of resources on the internet that will provide you pay data. But I'm going to warn people to truly be cautious with that, because you are not always comparing apples to apples. So what I really recommend people do is start with your network. Are there friends that you can reach out to get some information? Leverage your connections on LinkedIn. That is a great resource right at your fingertips. If somebody's going to use the internet to try to find some pay information, I would recommend PayScale. It's a great website that goes beyond just the surface level of, what is the job title, and asks you questions about the education requirements, the experience, the skills, the location, and it will give you a great snapshot of pay to really kind of help you make some decisions. So that is, of all the tools and resources, I found that one to be pretty accurate.
Interesting.
Yeah.
I'll have to look at that website. What else beyond salary do you recommend that women factor into their research when they're doing this type of work?
Yeah, great question. I'm going to kind of go back to what Jody was saying is look behind the scenes. Really take into account that total compensation. What does a company provide towards health insurance? What is their retirement planning? Is there a bonus structure that the company has in place? And really take a look at what is important to you. Maybe a benefit important to you is, flexible scheduling or paid time off. So all of those things are really important to consider when you're looking at the big picture.
What tips would you share to best prepare for salary negotiations, which I know women are notoriously not as great about sometimes?
Yes.
You'll probably share some stats, but whether you're at that job interview or even advocating for a higher position at your current employer.
Yeah, great question. And this can be really difficult. I think, as Becky even mentioned in the beginning, that women are less likely to be advocates for themselves and really, put themselves out there. And so what I always, recommend is start by knowing what you have to offer. Take a look at your education, the experience, the skills that you are providing, and how does that compare to the job? And, learn from the company, what do they really want? What do they need? And then, reflect on that based on what you have to offer from, again, your education, your skills, the experience. All of those things you can learn right in the job interview. Ask those questions so you can really position yourself to, sell yourself. I'm always going to say you are your own best advocate. Highlight your skills, and nobody else is going to do it for you. So you have to learn how to do and be your best advocate. The other part is know the market. Again, do your research. Leverage, your friends or your LinkedIn network to understand what are similar positions paying for. And if you're interviewing with another company, ask that company, what is the pay range for this position? But really, don't disclose your current pay, because you don't want to put yourself in a position where they're going to say, oh, we now only have to offer her this much. But again, it's great to know what are similar positions paying for. And then lastly, prepare your talking points. You know, when you go in to try to sell yourself, it's going to be really helpful for you to have that list that you really want to make sure that you articulate to, you know, highlight and sell yourself. Again, you are your own best advocate.
Those are some great tips. I think concrete tips as well for women going into positions of, like we talked about, who sometimes aren't that great at negotiating. So just put yourself out there. You
That's
can do
right.
this, right?
Yes.
Becky, what other action steps can women take right now to start enjoying more short and long-term financial security?
Yeah, well, I think we've talked about some great ones already. One of the things that you mentioned, Tara, from a negotiation perspective is that, you know, women need to be their own best advocates. When it comes to finances, oftentimes what we find is that women, at least there's a lot of research, that women are oftentimes less confident in their financial decision making, but it's not because they necessarily know less, it's because they think there's always more that they can learn. And I think that's actually a great quality because it means that, you know, women are always open to learning new strategies, to thinking about something else, to opening their perspective, right? They're less likely to think that they have everything figured out, and they're more likely to wonder what else that they can do. So rather than having, you know, maybe a lack of confidence keep you from starting, like we talked about before, you know, that can actually just put you into learning mode, right? What else do I need to do? What else do I need to understand and know? And so we oftentimes talk about here wanting to flip the switch from inaction to action. Because for so many of us, life has so much happening, there are so many demands on our time and our attention that it can be really easy to put off the things that seem the most challenging. And so how can you flip the switch? A few things to think about in the shorter term. One, you know, our website has a host of resources and information for people to start with, right? So we have lots of articles and tools and calculators and on-demand learnings. And we have live webinars. There's one coming up, I think, in November on saving for a down payment. And so there's a lot of things that people can do on their own if that feels like a good way to get started. We will certainly also meet with people, we do this every day, and anyone, anytime, to talk about their short or longer term goals. If it's day-to-day financial management and budgeting, we will talk to you about that, developing, you know, a plan for owning a home, which is of course one of the longest term ways that any of us build wealth over time. We help women and others that are thinking about starting a business and growing a business. We can certainly help with that. Women started, I believe it was about 50% of new businesses in the United States last year in 2022. And so that's a significant number. What we also know about women-owned businesses is that women tend to be more conservative around borrowing to grow their business. And it's because, in general, we have a more conservative mindset. We think about investing and borrowing a little bit more as a risk and what negative consequences could come from that, not just for us, but for the people around us and the people that rely on us and that matter. And so, you know, talking through that doesn't mean that's a bad thing. It means that, okay, let's talk about that. Let's talk about how borrowing to grow your business can actually be a good thing and how can we do that in the right way. So there are lots of things, depending on where you are, that you know you can do to get started to either learn on your own, be curious about what you need to learn about your own financial picture, like we talked about earlier. Regardless of what your goals are, where you're at, make sure you are mindful about what's happening with your money and that it's really in alignment with your long-term goals, your long-term life goals, that it's in alignment with how you think about the people that matter most to you, whomever that may be, right? And so in addition to learning, talk with someone, right? We can help. Jody's here. We have lots of experts that can help. We also certainly have programs. We have a financial wellness program called Red Shoes that provides really practical strategies and tips when you're ready to get started and you just want some things for someone to tell you kind of what to do. It's a great program. There's also events that you can participate in to network with others and things like that. So there are a host of resources, but if all of that seems overwhelming, just start with knowing where your money's going and make sure that you are saving every week, every month, and you're starting somewhere. And we have a great tool in our online and mobile banking called Climber that really does a great job of kind of taking that spending and distilling it down into categories and helping people understand what's happening. Starting with that. If it seems overwhelming to read and learn and do all of that, then just start with looking at your own picture and figuring out if you are managing your money in a way that is alignment with your long-term goals.
I mean, you talked about so many different tools that Summit offers. I mean, are those the resources that you typically recommend for people trying to just set up that monthly budget? I mean, is that all found on Summit's website for either Jody or Becky to answer?
Yes, absolutely. All of those. So we have a section on our website called Money Smarts, and that links to all kinds of on-demand webinars, to worksheets, to calculators, to articles and different tips and strategies, podcasts that we do. Our financial wellness team puts together those things and takes that financial education into workplaces, into the community, into schools, and there's a host of resources out there, in addition to, like I mentioned, tools within our online and mobile banking relating to budgeting specifically. And if doing that at a self-directed pace feels a little bit overwhelming, we will meet with you and talk about that, of course, wherever you happen to be. You know, if you are thinking about specific retirement strategies and wanting to be sure, you know, that you've got the right plan set up, that's something that Jody is here to help women with and does that every day, all of the time. And she's an absolutely phenomenal resource. If you're thinking about your day-to-day money management, and like I mentioned earlier, saving for a home, buying another home, starting a business, we can help you with that too. So it's our goal to provide not only resources, but people and expert guidance that can really help you take control of your financial security.
And Sheena, just to build on that, I mean, I think we live right now in such a woulda, coulda, shoulda world. You know, we all want to like repeat or not repeat history and learn from it. And so then start today. You know, Becky said that right away at the beginning today. Start today with whatever you can and let that compounding work towards you and for your future. I feel especially when it comes to women, we tend to ignore the advice that you get anytime you're on an airplane to put your own mask on first before helping others. You have to help yourself or you're not going to be able to help your children or others in your circle. So that's really where I would say if we leave with anything today, it's just that start now with whatever you can. And if it's overwhelming to figure out where to start, then that's where Summit has so many resources that can help you with that.
I think that's a great point, Jody, in that it is possible to save for the future and pay down your debt at the same time. And oftentimes people think that maybe it's one or the other. You can do both. It's just a matter of where you are in your priorities, and we can help you figure out, you know, which gets more priority at what time. So don't put off that saving for the future because you feel like I want to pay down my debt first, because both can happen and really need to happen for long-term financial security. And so we can help with that balance too. And you're absolutely right in terms of prioritizing the needs of others and thinking about maybe the financial security of your children, or maybe even your aging parents, but not thinking about your own personal financial security or thinking about it last. So maybe you're prioritizing how you're helping your parents with their finances as they age, or maybe someone's prioritizing that and saving for their kids' future and college and things like that. But their financial future is lower on the list, and you know that has to be kind of priority number one, wherever you happen to be and whatever your goals are.
I mean, I'm sure you get this quite often from, you know, clients that you work with, but what if that client is in their 50s, let's say, and they're sort of a little bit panicky about, well, I haven't saved as much as I wanted to. Where do you recommend women who fall into that category start, which is probably a fair amount of women watching?
Well, when I have people come in at that point, Shane, I just, you know, we start with where you're at. And what I mean by that is I get it. That might mean it's a stronger path that we have to put in front of us to get to the goals you have. But I think, we can't dwell on what we've missed as far as those opportunities. So you start with where you're at today. We look again at the budget. We try to ensure that we're doing multiple fronts. As Becky alluded to, how are we saving for any emergencies that can throw us off, paying down any debts that might be paralyzing us, especially in a rising interest rate environment, and then setting ourselves up for the future, because we don't know what that future, if it's, 10 years more of earnings capability that our bodies and minds will allow, or 20. So I think it's a key of starting where you're at today, regardless of where you feel you should be. If there's one thing I get asked, I swear every day, it's what's the number I need to have, for retirement. And I say, all four of us could have a different number. And that's based on our lifestyle needs. And so it may be, if you're late in getting started, that you have to adjust that number for your lifestyle. So don't compare to the neighbors or your sister or brothers or whoever you're talking to. Plan for what you want to be doing, and you might be more surprised than not that that plan is still achievable, even if you're starting later than you think.
I think it's important too, Jody, when you talked about, you talk to people about that every day, for everyone to know that we talk to people every day in every range of financial situation. And so I think there's oftentimes women and everyone has some amount of, maybe they're worried about that they're going to be judged, or maybe they feel like they should be in a different spot than they are. We've talked to everyone in almost every financial situation. We can help from wherever you are. And just know that we have certainly, and Jody can think of, I'm sure everyone that sits across the desk from her, she can think of lots of other people in that same spot that she has helped achieve their goals. And so don't let what you think you should have done or where you think you should be keep you again from getting that start or flipping that switch to action. Because, like Jody said, we can help and make progress from wherever it is that you are.
Yeah, you referred to women being information seekers and thinking, oh, I should have done this, or sometimes, we don't start a small business because of, not having all of that knowledge. And so this is great knowledge to know that this is a non-judgmental place that they can come into and work with you and your staff about that. And that's really comforting for women, I think. I think on the flip end, just out of curiosity, because we're talking about women in their 50s, what about women starting out their careers? I don't know if you'd want to speak to this in terms of what should they be saving? What should they start thinking about doing as they start their careers? Either Tara or Jody.
I'll jump in and then turn it over to Tara. And that is really, if they're starting young, that's a wonderful opportunity to try to, again, put a plan together that sets a fair amount aside for their future, not just for today. It's tempting to get the new outfit you saw on TikTok or to buy the new couch that's being advertised, but how can you do that? How can you do that within your budget? I try to have people save eventually towards a 15% savings rate towards their retirement, but they're not going to get there right away in their first job. If they are, I applaud them. But oftentimes it's going to be a case where they have student loans. They have a desire to get into a home and not be renting, start a family. All of those needs are going to spread the paycheck thinner and thinner, but that doesn't mean I'm saying to then do one and then the other. Oftentimes, like I said, or Becky said, too often people do wait. Put them in an order that they shouldn't force themselves to have. Oh, I'll wait till they're out of formula or out of diapers or into daycare, or I have my student loans paid off and whatnot. Though you could be waiting away years of opportunity. So I'd say, when they're young, that's an absolutely wonderful time to start with whatever dollar amount you can allow. Tara?
I would just echo that, and we've actually had employees who they think they can't afford to contribute to 401k, and we're like, no, you can. And they'll meet with one of our financial, educators, and they are surprised and like, oh my gosh, I can afford to put some money away to 401k. So I would kind of start where I think even, Jody and Becky were saying, you need to start somewhere. And even if it's small, don't make the assumption that you can't, that you can't afford it. And instead, find an expert, go to somebody like Jody or somebody at your financial, like Summit has to offer, and sit down and talk about it and say, okay, here's what I'm bringing in. Where can I start and what does this look like? And, revisit it each year, because again, things are going to change as you start to maybe pay down those student loans, and take that money and how can you maybe invest it into your 401k? And, again, always taking a look at what is that match that your company is offering. That's free money. And, that's really important to make sure that you are thinking about that. And I think you'll be surprised at what you would learn if you just take the time to talk about it and learn about it.
I think the student loan topic is important for women because I think women hold about 2/3 of the outstanding student loan debt. So it's certainly a significant financial burden and for many people. But it doesn't have to necessarily be paralyzing either. And I know that that's kind of easy to say, and the reality can feel quite different. But talking about that in terms of your whole financial picture, what are the student loan obligations? What are your other obligations? There probably is still a way to start saving and to start maybe taking advantage of your employer, any employer match or your employer's retirement plan, even if it is not as significant as maybe it will be once your income grows, once student loans grow. Starting it is still important. As Jody mentioned, don't miss out on years of opportunity because the $100 you put in this month is a lot more than that at retirement. And so wherever you're at, you can start somewhere, as we've repeated a few times, but it's an important message.
And I was just going to say, in giving yourself permission to change, there's going to be things that are going to, whether it be, you try to do the work and still raise a family and you decide you want to cut back on those hours. Okay, that's permission you're giving yourself then to adjust your balance and then adjust the budget appropriately. And I think that multi-focus, whether it be, I'm going to also pay down my debts and set aside, those are just some simple things that we have to keep reminding ourselves are okay. Despite what you might be reading or hearing, the pressures right now are intense because of how easy it is to compare ourselves and get lost down that rabbit hole. So just, again, giving yourself permission to adjust.
And certainly there's no financial plan, to your point, Jody, that is without things that bring enjoyment and fulfillment. And so this isn't about, it should never really be about things that are so cut and dry that you kind of squeeze out every inch of fun and enjoyment and fulfillment. That's really not financial wellness, right? Financial wellness is being able to feel comfortable that you can do and participate in the things that really matter to you, whatever those things are. So everyone has different priorities. Like I said, we'll help understand what those are. We can't give good financial advice if we don't know what those things are. And so that's oftentimes where we start, is really good questions about what your best interests are and what matters most to you. So it's important to understand that too. I think sometimes when people hear the word budget, they think about something that's just very, kind of boring and daunting and, maybe a spreadsheet and things that I don't want to pay attention to. But really what it allows you to do when you do it mindfully is it's not something that you have to think about 15 times a day. And also, it allows you to ensure that the things that matter most to you in the short and long term are part of your life.
And I always say budget's not a 4-letter word, so.
Well, we know that one thing that women can do to build generational wealth is home ownership. I mean, we didn't touch a lot on that today, but I would love if all of you could talk a little bit about some of the programs that Summit hosts for maybe first-time homeowners, or how women can even start imagining and taking that first step, as we've talked about, just start.
Yeah, so we, we're Wisconsin's #1 mortgage lender, and we are really proud of that because of what it represents. We're proud of that because it represents thousands of people that we've been able to help build wealth through homeownership. And so we have a lot of resources in addition to people. As I mentioned, we have a webinar next month on saving for a down payment and first-time home buyers. We have those throughout the year. We have several programs that people can participate in or understand more about, and it really depends on the financial situation and the goals. And so the first step is probably, again, to go to our website, read about them, understand what those might be, and then we will talk with you about those and figure out what types of programs you might be able to take advantage of, or how you want to think about saving for a down payment. That certainly can feel very daunting, but we help people do it all of the time. If people are thinking about buying a home and they need to take some steps to improve their credit, improve their savings position before that, we will work with you for as long as it takes to get you ready for that. And we have people that can help, and resources and tools that can help do that too. And then when it comes time to buy that home, and it's of course, extremely exciting, It's helping you figure out which product is the best, again, for your long-term financial goals. What is going to fit you best and the needs that you have. And so it's certainly a journey. It is not a come in and talk to someone for 15 minutes type of thing. It can be, if you want it to be that way. We can certainly do that. And we certainly do that really quickly for people that are buying their second, third, and fourth home and don't want to have consultation. But if you are at a spot where you're wondering how to make it possible, I would say start with the information and resources that we provide, attend one of our learning events, and then talk to us and set up an appointment. Talk to us, whether that's in person, over the phone, via video. We'll do it any way that's most comfortable for you. But we're happy to talk and build a plan, whether that plan's going to take you, 5 years or 5 months or 5 weeks. We're here to help with that plan.
I mean, I'm sure that you get into the nuts and bolts of this with your clients in those discussions, but what should people be sure that they have to be able to afford a house? Or what is there a percentage of their income that they should be comfortable with using towards a mortgage? Do you have a general number that you recommend?
Yeah, Jody, what's the number that you would recommend to kind of include all of the other expenses in addition to the mortgage?
What we tend to look at is for people to, between all of the other expenses they might have, again, student loans, car loan and whatnot, to not have over, 38%, maybe 40% if you want to round, of that being their pay. So if they're getting about $1,000 a month, they'd want to probably limit some of those fixed expenses every month to being no more than that 40% number. That's just a range. Like everything in life, we have to adjust, based on certain situations. But you just don't want to overcommit, because too often, especially here in the area, we have people saying, well, I'm paying this much for rent, I might as well just pay that much for a mortgage. Don't disagree with the dollars. It's just you have to look beyond the mortgage payment. There's going to be a dishwasher that will go out. Yeah. There's going to need to be water hoses bought or rakes or whatever it might be. And so you have to have those additional dollars for those costs that aren't as simple as when you're renting and you just call a landlord. So that's a general, but again, I would say don't let the fact that you don't have all the answers hold you back. I always joke and say I have yet, knock on wood, or not, challenge a man if anyone's listening, to have a man come in and apologize because they don't know where they should start. Whereas women come in and that's one of the first things they say, I'm sorry, I know I should know more, I know I should know this. We can't know it all. And I try to push that back when I get away from the finances. Do you go to your mechanic and apologize? No. Do you go, so I think we have to let that stigma fall off for women, that if we don't have all these answers, then come in and ask and we'll give you them.
Right. It goes back to, what I was saying earlier, Jody, about don't let that perceived lack of confidence keep you from it. Use it as curiosity. Take maybe a lack of confidence and turn it into curiosity versus letting it hold you back. And I think that's a great point, Jody, about, it isn't, of course, just about the mortgage payment. When you're thinking about owning a home, you do have to think about all of the things that you're going to need to care for the home. So as part of when we're working with someone on that and determining what the right mortgage product is for them and their payment, we also want to be sure that they have the funds in savings and they have the capability to build enough emergency savings to be able to afford those things that come up. We have a homeowner savings account, to your point about naming something, that our homeowners can take advantage of to be sure they're putting funds away every month for the unexpected. That's extremely important. I remember when we bought our first house, we had friends that lived in the neighborhood. And so we shared a weed whacker because it was easier for us to afford half of it than all of it. And since we were longtime friends, we just shared some of the lawn tools. But, everybody does start somewhere. And as long as you're mindful about how that's going to work, and that's what we can help you with. And again, don't feel like you have to know it going in. Nobody knows everything. And we all learn from each other every day. We learn from members every day and their stories and their experiences. And one other resource I would share is on our website, we have our Project Money contest that we do every year. We've done this since 2009. And the participants share their stories on weekly blogs, and they are so phenomenal and relatable. and they're about practical day-to-day money management. Reading through those blogs can provide you with so much insight into how they're managing all of the things we've been talking about today, the tools they use, the conversations they have. So that's another resource to read and feel like, okay, I've been there. I know what that's like. And so it's so incredibly generous and brave of those participants every year to share their stories publicly, because so many thousands of people in the community and all of us at Summit learn from them.
Two more questions for you ladies before we wrap up today. One of them is, let's say, you have someone who's been meeting with you regularly and they're really feeling really good about their budget. They have a little bit of extra money set aside. I mean, Jody, where do you recommend if somebody has a little bit of savings where, they should put their money, a high yield savings account, a CD, a retirement account? I mean, where do you start with people that say, okay, I have a little bit of money set aside now. I've been following everything you're telling me to do, and I've been really good about my budget. What do you typically recommend for women?
Well, there's two things that I would bring up. One is this a one-time thing? Did they just get a bonus? Or is this a regular, they got a raise? So we figure out what the frequency is of this extra money that they have. The second thing I would add would be their priorities. Where are their priorities at? If their priority is that they want to buy a home, okay, then let's look for the best situation for that. And if that's still a ways out, right now there's some phenomenal CD rates that Summit's offering. So a certificate of deposit can give you a much higher yield as long as you're willing to, look away from that money. And if that's something that you can certainly do for the time frame represented in the certificate, then that's a great opportunity. But to me, it still comes back to, where did this money come from? And then, where do we see our priorities lining up? Because when people come in more specifically looking for investment advice, I always try to break it down to their timeline and their tolerance, which is basically that same thing. What is their timeline? If it's shorter term, then despite what the markets might seem like they can provide to you, I'd rather you not, go to a ho-chunk, right? No offense to any gambling out there, but just to put it into a position where we could lose it. I'd rather you put it short term and somewhere safe and secure, and someone offers some wonderful opportunities. If it's long term, yes, it might be a gambling type of an opportunity, but more of a calculated one, where we put it into an investment of a sort that matches their risk tolerance.
My last question, I just wanted to circle back about the salary negotiation topic one more time. It's very interesting to me. It's something we write about frequently in BRAVA as well. What tips would you have for a woman looking to ask for a raise, let's say 6 months, a year, maybe a couple years into their job? How does one approach that conversation with their boss?
Good question. I think it goes back to comparing what you have to offer to the job and the needs of the company. And then again, preparing your talking points so you can really articulate and assure that you highlight all of the points that you want to address as it relates to the skills that you're going to offer to the company or to this job. But again, it's just really knowing what you have to offer, how does that compare, and prepare and practice that conversation. Again, you are your own best advocate. You have to sell yourself, but making sure that it relates to what the needs are and that it does fit what the job needs as well. So I don't know, Becky, if you have other...
Yeah, I think that's great advice, Tara. I would say, and this is really similar advice, but I would also say to think about what the impact is that you have made and want to make in the future. And when you think about the needs of the company, that's kind of the same thing, right? But rather than thinking about, you might want this particular title or this particular position description or something like that, think about how you have impacted the business that you work in and your coworkers, and think about how you want to do that in the future. So how are your skills and how are your individual talents going to continue to bring impact? So also think about that, not only kind of the nuts and bolts, but also what are the things that you're most passionate about and how are you willing to bring those forward to your company?
Yes, and just again preparing then those talking points to make sure that you highlight those, because that can always be hard. You have that conversation, if you haven't prepared or practiced, you might forget some of those things to sell yourself. So really prepare for that conversation.
Yeah, and I felt it was important to circle back to that just because, again, as you stated so eloquently, that really is one of our wealth building tools, is having a job that we can feel comfortable on, for us and our salary and our families and building that generational wealth. So thank you for that great answer.
Another thing I would add to that I think we mentioned briefly is that when you think about lifetime earning power, one of the factors that impacts women's lifetime earnings is that they are underrepresented, as I mentioned earlier, in higher paying fields and leadership positions. And so if one of your goals is to increase your lifetime earning power, it might involve retooling your skills, thinking differently about the type of job that you want, thinking differently about what might interest you, and perhaps going back to school or returning to school or learning something new. That's always something that to consider if you are really looking to increase your earning power, and maybe the career path you chose at first has more limited potential. It depends, right? Always on your goals, but learning new skills is always a great way to do that too.
Absolutely. Yeah, we write about that as well in BRAVA, and even with the pandemic, it did cause a lot of women to step back and say, is this what my passion area is? Do I want to be doing something different and taking that plunge and maybe going into a completely different field? So it's worth being thoughtful about, what's working for you and what do I want? So, well, ladies, thank you so much for the panel discussion today. Jody Brown, Becky Jarathanis, Tara Clune. Thank you to Summit Credit Union and Summit Financial Advisors for co-hosting this event with BRAVA. It was a delight to speak with all of you today. Don't forget that this discussion will be available to listen to and watch on bravamagazine.com, and a link will also be sent to all registrants as well. So please watch your email for that. Thank you for joining us today.